Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, hold on a second here. There we go. I was like, something's not right. Hey, it is Monday. It is the end of the month. It's been a while since we've had the end of the month on a Monday, isn't it? So this should be fun. Let's come in and look at the charts here today. So, a little bit of chaos on Friday. We are back up to where we were. There was a bit of a sell-off overnight. People were saying that the Japanese bonds were kind of falling, but then there was a surprise operation, kind of stabilized things, and now we are a little bit higher this morning. Here in the S&P 500, they were able to recover pretty well from that doozy of a day on Thursday, and kind of pushing the higher end of it again. This equities market just looks fearless. Here's oil. Oil is just, whew. That trend in oil since June 27th is just looking wow. Here we got gold and silver, because gold getting back above 2,000. There is, remember though, like super hardcore resistance at 2050, where we've topped off like 3 times. So, and just to kind of give you an idea of where we're at, and we got silver still trying to recover here a little bit, and Kappa looking good, because China is saying that they're gonna do real stimulus to the economy now, or something to that effect. I'm not quite sure. I understand why everybody's excited about this one when they weren't the others, but is what it is. Global growth looking better, and that could continue to fuel this equities rally. That's kind of where we're at. And that is kind of the thing that I'm looking at is, all year we've kind of been saying, well, there could be some weakness at this certain point. There could be some, right now there could be some weakness in the second half of the year. And while we have gotten certain individual inflection points correct, that we didn't get too much downside action out of them, and it just continues to be a bull, right? And when we're in a bull market, it tends to just keep going, right? In fact, if we're getting stealth stimulus into the economy, and the politicians have kind of found a way to kind of slip that stimulus in there without anybody realizing it, well, hey, it could keep going. And even with student loans coming due, and eviction moratorium, that's another big one. It seems like those, Biden has kind of put some things in place so that that's not going to have the impact that it would. So I think this can probably continue to go for quite some time, but we'll see where it goes. Meanwhile, here for us today, I'm not quite sure what the rebalancing is going to be, but just judging from the way that it's moved over the past month, probably they're going to have to sell some equities and buy some treasuries. But let's see here. We're at 396. So this market kind of seems undecided between 3.8 and 4. I don't know if they're going to go to 4 today, though. I mean, look, there's 1768 at 111.13.5. So that does kind of look like that's, that they are going to go to the upside. kind of tempted to test the market here and see what happens if you put a limit order at 3958, but although it kind of looks like there's been a little bit of a node here at 14, so that was weird. Okay, so this ticked down. The micros ticked back up, but then ticked down 2 ticks, even though this didn't move back. There you go. It's a little light on the inside there, huh? That actually kind of presents a little bit of an opportunity here. So I wonder if I were to... Oh, never mind. Somebody put something there. Looking around the internet. Okay. Oh, by the way, you know, I didn't mention the things we got ahead of us today. We do have at 7:20 Feds Goolsby speaking, but then at 9:45 Eastern Time, U.S. Chicago PMI. And remember, that's the one that gets released 3 minutes early. So at 7:42, we're going to be watching the market to see what the reaction is, and we don't want to be in positions at that time. Could be relatively, you know, last time around, there was a relatively large move in PMI. We got a reading of 41.5 last time, and they're expecting a reading of 43.4. And some of that data is coming in a little strong, so I wouldn't be surprised if it's like in 44, 45 range. So remember, that's like a diffusion index where 50 is equal, right? Let me double check on that. I'm pretty sure that 50 is, but they haven't been 50 for a long time. That's the thing. Like that's crazy weak. Yep, above 50 indicates expansion. We've been below 50 since how long? Since September of 2022, so for a year. Jeez. Well, not quite a year, but still. still no trades over here. Yeah, I don't know. I think this is a tough one because I do think that the end of month flows are likely to be long, and we're kind of seeing a little bit of evidence of that. Plus, you know, with the intervention from the Japanese yen, I think that's also something that would kind of bias me along. But we got that Chicago PMI, and you know that can always screw things up, right? Good morning, 80. I didn't say good morning to Octavius and Uzi either, so I should say good morning to them as well. That offer at 13 has kind of been weak, but they haven't really. Yeah. So, what I'm seeing right now would normally be like indicative of a liquidity hole, right? But I believe in this instance, it's just a lack of interest. Like there's that little bit of activity going long before the open and then a little bit after the open. And since then it's just there hasn't been a lot of volume executing here. Yeah, I've really enjoyed Edge Clear. I mean, it's so funny. Again, we've had this discussion so many times, but with your broker, when you have a good broker, you just never notice because you never end up needing them, right? But I will say my experience since moving over to Edge Clear has been much better than with the other discount brokers that I've had. And I really think that with Edge Clear, you're kind of hitting a sweet spot with a good service and relatively reasonable commissions, because there are some, you know, quality service brokers out there that you really pay quite a bit for commissions, right? But I think Edge Clear is a little bit more competitive, and you still get people that know what they're doing. So I've been happy with it. And their platform, the free well, it's not free. I think you have to pay for it, but their Edge Pro X platform is pretty good. I don't like it quite as much as NinjaTrader, but I think it gets the job done. Oh, it looks like a spam account. Somehow escaped me. That's the one you're testing. It's like, oh, is it really $39 a month? Well, I mean, I guess that's what they usually are, right? You know, it's funny because when you get into when I was getting into testing, it was all these tiny little things, right? You know, it's always like, well, I like my chart to look like this and like this. You know, it's just too pedantic, you know. Like in other words, it's like I can tell you what would make me more willing to use the platform and what I would like to see in the platform. But it's kind of hard to say like what would make a difference for you in terms of like capturing the larger market, you know? But I believe that their platform is based on Motive Wave or one of those. So. Oh, no. You don't use Ninja's DOM. Yeah. Now, if you're going to be trading with Ninja Trader, you want to be using Jigsaw, right? You'd be using Jigsaw and use the bridge. But I mean, that's the thing with Edge Clear is that you can use pretty much anything you want. Oh, Sierra's DOM is totally fine. Yeah. Like really what Sierra Charts does is they steal everybody else's features. So that's not my favorite thing to see in a developer, and I think that there are some downsides to that. But in terms of having the features and functionality that you need in order to really see and understand what's going on out there by watching it on the DOM, Sierra Chart absolutely passes the test. In fact, I would say it's like top 5 platforms for that sort of thing. I can't remember what my experience was with the Edge Pro X DOM, but my recollection was that it was sufficient as well. Yeah. I mean, so let me get more specific. The thing that I look for that is often missing from individual DOMs that is really important is a current trades column. So you can see here in the middle here in my Jigsaw DOM, so the orange-red column are the offers and the blue column is the bids. And then the 2 columns in between are the market orders. So last time we ticked down, it only took 22 contracts to clear it, right? But it was 196 last time we went up as well. So they've been trading back and forth across 13 with not a ton of volume trading, right? But if, for instance, we were to trade down at 12.5 again, right now there's only about 600 contracts on bid. But what if they ticked down and it actually, I actually saw 2,000? That'd be like, whoa, okay. So 1, there was somebody with a market order out there willing to hit it. And 2, there was actually somebody sitting on there with an iceberg. Both things kind of surprising. But I kind of want to see that pace of how much is trading each time that they clear a price, right? And that gives me an idea of what the latent liquidity is because, a lot of orders out there, they won't show up until just as they execute because they want to hide their intentions. They want to use a limit order, but they want to hide their intentions. So you have to watch it just as it ticks back and forth each time, how many contracts are being taken out, each time. And when, your typical DOM, it just shows you the limit orders and it shows you like the volume profile maybe. And that's it. And you kind of have to sort out from the volume profile how many contracts traded. It's a lot harder. So that's the thing that I think is really important to watch. No. So those middle columns, they reset every time that price has changed for more than 2.5 seconds. So if we tick up, right, and then we sit there for 3 seconds, and then we tick back down, that bid will reset to 0. And that way you can see every time a price gets cleared, essentially, how many contracts it took. And you can change that, if you want it to be a longer time period. What do you think of futures? So I assume you're talking about like prop trading firms. So I think that if you have a really risky strategy that is likely to blow up, but that it can make a lot of money in the meantime, that trading it with a prop firm's money makes a lot of sense. But otherwise, I just don't see why you wouldn't want to trade your own account. Especially with micro contracts, like micro treasury yield futures, you can trade for $1 a tick on an instrument that doesn't really move all that much anyways. Yep, but within 2.5 sec, yeah. So by the way, what I was talking about at 12.5, look, they did end up trading 2,900 contracts there. So that has me wondering. That was a relatively large market order to come through here. Market doesn't seem to be reacting to it too strongly. There's definitely some flattening going on here. The 5-year moved down a lot more. Which is probably why they were able to have the volume on both sides. But yeah, if it ticks up and then like almost immediately ticks back down, right? Then the volume you see there in that current trades will just continue to add there. So kind of handy. Something that I frequently will get emails about from time to time. So there's this group of people that are trying to get access to like Fortnite alpha builds, and I have some of, or I tried some of the earliest alpha builds that were available to, not some of the earliest alpha builds that were available to the public. But I didn't save them. I don't have them. I've switched computers since then, so I don't have it. What's the best broker for people with small capital? Well, so I don't know if there's really too much of a difference over there. I think that the cheapest still tends to be AMP futures. So you can do AMP futures. You can do Ninja Trader. Ninja Trader lets you start pretty small too. Edge Clear requires a little bit more margin to put up than the other brokers do. But that's where I'm kind of like, well, if you're starting like a small account like that, I think you start a small account like that mostly to trade at sim, and maybe every once in a while when you really have strong conviction on something, you can try and go for a trade. But, because with that small of an account, you can just blow out so easily, especially people like they'll let you open up an account for like $400 and trade micros is just like, ugh. Micro ES, yeah, you blow that account in a day easy. I'm not aware of any prop funding from Edge Clear. That wouldn't make any sense. Why would they do a prop firm instead of, what you trading your own account? Because they're the broker. They want you to trade. I'm not familiar with that. I'm not too familiar anymore, or at least I can't remember all of the prop firms out there. There's like 6 of them now. Why did you choose futures? Well, so the advantage with futures, especially with treasury futures, is that the information that you really need to know is all in one place because all of the transactions happen on the exchange. If you want to go and trade stocks, I think that there's some real edge in trading stocks with order flow right now. But you have to realize that there's a lot of transactions and stuff going on other places. And while that information does eventually filter back into the market, it just makes it a little bit more complicated of a game. you know. But futures, because all of the information is centralized and everybody can put limit orders and see the book, I feel that it's a much more fair game, right? And then on top of that, you have the margin, right? So if I were to day trade, I would either do it with futures or day trading individual stocks, right? But there's all of these problems with, like the pattern day trader rule and all that sort of stuff that kind of make trading individual stocks a little difficult. Oops. That was the first time I had heard something from my news squawk today, but I had forgotten to turn my speakers off. Okay, so they've come all the way back to 12. It's still been pretty quiet out here. It's a Monday. So the issue that I'm having is like, well, I do think that it could be a long, but the volume is relatively low. We have Chicago PMI, and so I'm unconvinced that my edge is relevant to this current point in time. Yeah. It really is weird how futures come out to be like just have the advantage in almost every way over their ways of trading. The one thing that you get with stocks is that you have so many instruments to choose from. So you will almost always have a place that you can play where you'll have an advantage, Do you trade ES? No. I mean, I used to when the micro ES futures came out, I traded that for a while. And I had periods of success but overall I would say that I had a very difficult time trading that. And I did not perform as well as I do over in the treasuries now. So I trade futures using the order book only. What's the advice for me? The advice for you is to listen and to the news and read as much not quantitative, but research in general as you can, because it's very, very difficult to gain a strong edge just from the book. I feel that the book is kind of like a minimum requirement. Like you won't understand what's going on if you can't see the book. But the specific edges that you can gain to get like an edge in a very short time frame are very difficult to take advantage of because of the robots. And so the place where a retail trader can really gain a strong edge is knowing what's going on in the market and, using those informational edges in conjunction with everything else that we have, which means not just order flow, but also your correlated instruments, things that we know about volatility, your risk management, etc., right? Was there a particular... Well, so the issue with ES is just that there's a lot of noise over there, right? It's hard for a retail trader, or another way of putting it is like, okay, so like most day traders lose money, right? If we were to look at this game, let's just pretend that everybody was trading on a short time frame, right? What would end up happening? Well, what I've found tends to happen is the market will kind of, oscillate around, And those oscillations will just kind of get bigger and bigger and bigger until it's shaking everybody out, right? And it's like the guy with the largest amount of margin ends up being the winner, right? So when you're playing the random game, that's kind of like what it often ends up coming out to. Okay, they are slumping down to the lows here. Even though my DOM shows that there's the lows, this is just the lows since the pit session started. The overnight lows are much, much below us. Yeah. So in ES, there's just there's a lot of noise in general, and then there's so many other things. There's so many things going on too, right? Like you could get a move in the index from one of many different stocks. A really strong piece of news in any one of those stocks could move the index, right? There's a lot of things to consider, right? Now, so the way that you got to play the ES, I think, is like, you really want to catch a runner at some point, right? You really want to catch it like you had the edge, you positioned yourself really well in the morning, and then you're able to just let it run all day, and then you can get these trades where you make thousands of dollars, right? And it's just crazy. That's how you got to play ES. But it can be hard, especially if you're trading like, you have a trade that like you're only going to be in for 5 minutes or something like that. Then it's really, really hard in ES, because you really are like most of the time you're just at the whim of noise. But I would consider ES one of the more advanced instruments to trade. Yeah. With treasuries, when it's moving, there's usually a good reason. The amount of like just natural oscillation that you get in treasuries is a lot less than other instruments, because there's so much liquidity, right? And then the thing is that the other thing is that the more liquidity that there is in an instrument, the more predictive signals that tend to exist. Because it basically means that there's going to be more large funds, et cetera, that are regularly executing and that you can potentially predict, right? So today, being the end of the month, there is absolutely going to be some funds out there rebalancing their portfolios. How much, and if it really matters more than the other things, I'm not sure, because I don't have a way of really estimating the exact amount. I haven't heard any analyst reports on it. But that they're going to be there, all right? And there's a lot of opportunities like that in the treasuries. Then on top of that, the treasuries are just very, very sensitive to economic news. And so you can trade the economic news as well, which affords many great opportunities. Because there's a lot of instruments that you can trade on the CME where I think you can read the order flow, and it's a good game, and you can just study your instrument. Like you can trade agricultural ones like wheat and corn are okay instruments to trade. Oil is a good instrument to trade, but although oil is volatile, gold and silver. But the advantage to ZN compared to those other ones is that the news that's going to be moving it's much more clear and like available to you. Because I don't know what's going on with gold miners, for instance, right? I don't know enough about that industry to know the pieces of information that are probably going to give me an edge over there. And I've kind of searched around, but it's hard to find. I'm sure that if you worked for a gold miner, you would know a lot of things that would help you out there, right? Yeah, reading the news in a month. You know, it's all comes with experience. You read a lot of Zero Hedge and stuff, and you. So kind of the issue is that there's not like a book, unfortunately, that I know of that really gives you like a good like base layer of here's all of the macroeconomic news that you need to know, right? But as you read along, the market is your teacher. So as we're moving down here, I am seeing the Japanese yen slump with it. But given that the Japanese yen had some intervention earlier, we might see that come in here again. So look, we should keep an eye here for anything fishy. So if you don't trade it, yes, is it on your screen for reference? Yes, because it is a correlated and or competing instrument, I guess you could say, right? So if the S&P 500 is plummeting super hard, I would probably see buying come into the treasuries. And if I don't, then, I'm going to take note of, okay, why is that? What are the macroeconomic conditions that may be causing them to both go down at the same time? Maybe the S&P 500 is going down because interest rates are rising, right? But the usual correlation is S&P 500 moves down, treasuries move up as a flight to safety, right? Good morning. And Stuffa, welcome back. And then on top of that, like, you'll notice that I have tick aggregation turned on for the S&P 500, so it's only showing me every 4 ticks instead of every, quarter point. And that's just because I don't glance over there that often. It's a lot easier for me to kind of see on a higher level perspective what it's doing. And yes, it's also the dollar that I have down here, and this is my synthetic dollar index indicator for NinjaTrader that you can get for a $100 lifetime license from speculatorseth.com. Correlations with the dollar are very, very important. Especially lately, the dollar has been so dominant in the market. Kind of looking at it, I'm seeing something like hyper speculative here, but earlier in the night there was a surprise buy operation by the Bank of Japan where they bought into JBGs, and that kind of like stabilized the market. Now we're seeing that pressure in the Japanese yen again, and so I'm just sitting here thinking there might be a point. We're not quite there. By the way, I need to erase this 4%, 4% because that's not what 4% is anymore. But I think probably closer down to like this, there's this big, relatively large order at 06 would be kind of like the lows in the Japanese yen where maybe they might try stepping in. I guess the larger thing I should say here at this point is that part of what I'm doing is I want to see where is the money coming from and where is it going to? Because you're going to see money flows shuffling around throughout the market every day, So over on this other screen, I have charts for many different instruments, right? I have a chart for oil. I have a chart for Bitcoin, Japanese yen, gold, wheat, and switch this one around between wheat and copper, right? And then I have a market analyzer that tells me, okay, biggest winner is copper. Biggest losers right now are wheat, corn, soybeans. Okay, that tells me a couple of things. And then the Japanese yen. 6J, right? So where's the money coming from and going to? Well, there was a lot of money went into those corn and wheat commodities last week because of the Russia thing. It looks like it's coming back out, right? And where is it going? Well, I assume the S&P 500 and oil. A little too early to tell for the S&P 500 though, right? There was a 3K iceberg there at 09.5, by the way. But like, look, the amount of volume they were trading is just really low. So I'm tempted to come in and take a trade, but we're not getting a strong enough flow, right? Because I want to get in. I want to be like, there's some big guy out there that has to buy a ton, and I can just ride the wave on him and stuff like that, right? That's not really not what's happening. It kind of looks like the interest is not there, and they're just kind of languishing, and the Japanese yen is falling to new lows, right? Okay, so I am seeing a spike there in the dollar, and the Japanese yen is falling pretty hard. So that might wake some people up here. Let's see. A little concerned about what I'm seeing in the liquidity here in ZN. Like, I feel like it should be higher than 16K at 07.5. What's with that? Or can you find the software? So the DOMs that you see up come from Jigsaw Day Trader. I have an affiliate link in my video description for Jigsaw. And then the charts are from Ninja Trader. I don't have an affiliate link for Ninja Trader, but I do have sell some of my own indicators for Ninja Trader. So I'm just saying that, you know, and it's a matter of disclosure. This could get really interesting here, guys. curious to me. I remember down here we were like, well, nobody's trading the micros. Okay, there was one contract at 967. I kind of thought, well, let's see what they do at 07, but then they just blew through that one, right? So now at 3979, some action actually happening and some retail traders actually coming in and taking trades up here. Octavius is saying he wants to pull back to the VWAP for a short scalp. Well, that's kind of how I've been leaning too, but I kind of want to see something happen down here. Oh, okay. So on my charts here, the lower charts that I have one for. This is ZB, ZN, ZF. And the main thing that I have these up for is one, cumulative delta. So, you know, you can kind of lose track of the volume and lose sight of whether there was more buy or sell orders overall, right? So I want to see, you know, cumulative delta. I want to see cumulative delta and volume going together, for instance, right? And then the other thing is the spreads. So I can see the spreads on my DOM, but, you know, you can kind of forget what we're doing and you can lose sight of it. So having it over here on a chart is really useful. Right? These are all things that I can see on the DOM and that I take note of as the DOM is moving around. But, like, you know, it's good to have a reminder. Good to have something to keep track of it, because that's a lot of stuff to remember all at the same time, right? It looks like we did move a tick lower. Okay, we got Goolsby speaking now. There's still that relatively light liquidity below us that just makes me a little nervous. Hmm. Sounds like Goolsby is talking about policy, so... Oh, the lower DOMs, so yeah, those are the micros. So I'm watching the order flow up in here in ZN, but I like to trade it small. I've traded better trading small. Okay. I just did something relatively risky, but I saw the order sitting there, so I decided I would take it. Yep, I watched the order flow of the main one, but I trade the micro. Yep, exactly. I mean, in that situation, I did. So that one, I saw there was an order sitting out there, but there wasn't any liquidity in the levels below it. So somebody was clearly looking for an out, or somebody clearly wanted to buy it there at that specific price. So I decided to fill them because I knew that I could catch the edge there, right? And the treasury ticked up to 09.5, which helps. But it is kind of playing for a reversal, so it's kind of a risky trade. I don't like that the Japanese yen had fallen the way that it did, but it seems to be doing okay here. Okay, so I'm going to read a few tweets here from Brad Stester. As Keith Bradshaw, New York Times story makes clear, China's default stimulus remains measures that clearly support domestic industrial production. So IRA-type stimulus, not CARES Act support for all type consumption. These kinds of measures suggest a lack of seriousness from stimulus from encouraging local governments to hold food, music, and sports festivals to attract tourists. Don't think that passes the laugh test. That skepticism is warranted. China continues to avoid taking the most obvious of steps to stimulate consumption, cutting checks from the national budget and reducing its very regressive taxes on formal work. So the numbers are moving, just bids and offers, but no, yeah. I don't think that any other orders have gone in, but you're right. In the micros, a lot of what happens is the bid and offer will move based on what happened over here in ZN, and the retail traders had not necessarily taken advantage of it. When asked about the rate hike, Goolsby said he's not a fan of tying our hands before the data. Yeah, there's a lot of data to come out before the next Federal Reserve meeting. Does the lower liquidity on the micro make it difficult to trade with as a beginner? That's a tough one. I think I would say yes and no. Because I would say yes, it is a little harder to trade with. Just because if you make a mistake, you pay a little bit more for it, right? If you make a mistake, you might not be able to get out where you wanted to, and it'll move 10 ticks against you sometimes, right? But on the other hand, I would say that having to deal with that and watching with those sorts of things is a really beneficial thing to learn. And I wouldn't let it dissuade you from trading the micro, is what I would say. And the advantage of being able to actually trade live, but with minimal risk, definitely makes up for that. Okay, so somebody put an order at 397 and they decided to take him on it. I can kind of see here that the market maker doesn't like, the market maker in the micro doesn't like that we're pushing back up because they're not pushing their offers down. Right? Well, okay, now they kind of came. You see this spread there is really, really wide now. Should we see a little risk of blank today and tomorrow, or what? I feel like you skipped a word. Yeah, the spread between the bids and the offers. Yeah, so you see that there's like, what is it, 3 to 4 ticks between the best bid and the best offer, right? And it actually kind of widened a little bit. It's like those offers don't want to come back down. Probably because the positioning isn't favorable for the market maker. So very different than what, oh yeah. Well, what happens over in ES and NQ kind of has similar dynamics, but it's happening so fast and at so many, across a wide range of prices. So, but it is much more relaxing, isn't it? And I think one of the biggest advantages to trading over in the treasuries is that it gives you time to think. Well, I tell you what, that came out really well. Look at that go. They are now... Okay, so the Japanese yen is hitting back hard. I don't know if there's actually clear intervention happening or not, but the treasuries definitely got smacked back across that range really quickly. I feel the need to apologize for whoever it was that I hit up there at 3975. I hope that was somebody exiting a trade and not entering one, and it's nothing personal, man. Yeah, not in the thousands, but yes, the numbers on the left are the profits. So I've made, assuming somebody were to hit me at 3958, I would make $15, $17. You've got a foolproof way to crush it today. Well, go ahead. The commission is $1 round turn, so. Oh, I'm on delayed data. Simply watch your dumps. Yeah. Gotcha. Yeah, it's not too bad. So $10 to $15 is about average for a move. For it to flip back that hard is really actually quite unusual. I'm kind of watching here at 12.5 because I might want to take it off here. I don't know. We'll see. I mean, I have a choice. That was like the swing. So we're likely to see somewhere around here some sort of a distribution. And then I have the choice of I can take that distribution or I can wait for another impulse to push us even higher. What would your daily target be? Well, I don't really give myself targets, to be honest with you. Like, the thing is the market gives you what it gives you, right? So, but in a situation like this, I would say that anything over $10 is pretty good. Right? But there's certainly, with the way that it moved, kind of makes me wonder if there's not some potential for it to keep going. But, you know, to give you an idea, like if I were to make $50, that's a pretty big winner. I think that 100 is like the largest I've ever made from the micros. And that was like holding it overnight. So if you hold it for multiple days, then you get into where you can make a couple $100 from it. Okay. So you can see that the bids have not really firmed up too much. They were able to fall 2 ticks there. Yeah, now, by the way, on that move, the dollar just like got creamed. And part of it is the Japanese yen like swung back hard, but it actually looks like it's more the euro right now. Or maybe it's just the dollar in general. But the dollar moved a ton there. Okay, so now I'm starting to think that we've got that Chicago PMI coming up. And that's in about 7 minutes, 6 minutes. No, it's 3 minutes early, right? 3 minutes early. So they'll be at 42, so it's actually in 5 minutes. Yeah, the way that they're holding the spreads is not very advantageous for me, right? Kind of keeping track of everything here to try and see if there's any signs of movement in one spot of the market or the other. So far, I think, you know, there's some correlations in here, but it all seems to be like fairly in line. So I'm not getting any kind of hint of like, there's definitely money coming from Japan or wherever it is. Okay, so I'm still seeing some activity over here in the micros. So the 10-year is trying to push up right there, but the other two aren't quite coming along. 2 minutes. Yeah. So you see the liquidity thinning out. Well, I don't like the looks of that, so it looks like I'm gonna YOLO this. Can you check USD JPY? Yeah, I have it over here. Well, I have it over on the far left. You can see it kind of reversed there. I'll zoom it out a little bit. You can see where it kind of busted. So it's right now in the Japanese yen, they're coming back to the site of the scene of the crime. Okay, so the news came out. I'm not seeing any kind of clear activity. So unless the early release number is late here or something. Well, that might be good for us. What about the E-mini? E-mini is pushing up. Looks like they're maybe going to make a shot at the pre-market highs, which were at 46.18. Okay, so the liquidity is not returning yet. They may keep it like this until the full number is released. This song feels kind of inspirational today for some reason. It's lower than forecast. Interesting. 42 spot 8 versus an expected 43 spot 4. So now that confuses me a little bit, because I kind of thought, oh, that number might actually be a little bit higher than anticipated. It being a little bit lower than anticipated, that seems like something curious that would move the market. And when the early number came out, it didn't really move the market. Now that the full number has come out, I do see a little bit of buying. The liquidity is not returning, though. Not yet. They may kind of be a little bit on the light side here. This is very curious indeed. Although with it there being 12 and 13 at 03 half and 04, that is kind of advantageous for me. I don't know. Looking at this, a lot of how this has played out has just worked out really, really well for me, and I feel like it's a really good example trade. But on the same token, I'm still a little unsure if my, I'm really correct here. Like, I don't know if it's moving up because of the reasons that I thought it was going to move up. It's a little fuzzy, it's unclear. I may have just gotten really lucky this time. Of course, if we bust out the top here at 14 half. Oh, they're stepping up to it. In fact, they're lining up. The 5 year is maybe two ticks below, but the 10 and the 30 are lining up quite nicely for a level break. So, normally if I wanted to play the level break, I'd be buying here at 14. But in this situation, it's a 50-50, so. And in fact, they didn't even wait for there to be any absorption at the 14. They just decided to take 14 half. The 30-year jumped up there, man. That's good. I would like to see this liquidity stack a little bit better. And there is some liquidity at that 16, but there's always some fishy things going on at 16, right? Okay, so I'm noting a lot of level 2 activity here. The book is just shifting a lot. A lot more than the actual volume that's coming through, right? So I'm just noting, so even though we came a clip higher here, did not notice a accompanying shift in the Japanese yen. but there was an accompanying shift in the dollar. And if we bring the dollar out here, that was actually a breach to lows of the day for the dollar. Okay, so level 2 activity is calming down. I'm also kind of left wondering how much of this movement up was puking, because, you know, I did kind of think that down when we were at towards the lows here, felt like that it was probably moving in a way that the market maker was not happy with, you know? So maybe they puked there. Now, let's see here. Well, we got Dallas Fed Manufacturing Business Index. That's not a very significant number, but that's at 10:30, and there is a 6-month bill auction today. Is there anything else worth noting here? Not really. So now I think we're in a place where, like, you know, end of month flows, and I guess the other next major thing that happens is the euro. So given, and now that you're getting some big volume hitting into 15.5, I think that means that I can continue to hold this for a little bit. Size showing up at 18. Oh yes, I see. Well, I was curious to see at 16. They are trading a little bit just before 16. So it's about almost 4,000 contracts at 15.5. But I'm expecting to see a reasonable amount of volume trade at 16. So there's usually some liquidity there. And there is a big order there at 28 in the 5-year. That one sticks out like much more of a sore thumb. Oh, and then there's 30 in zeros, evens. They did touch 16. You can kind of see over here in the micros. They're still holding the spread against you, like really wide. Why you gotta be a sore loser like that, yeah? So the thing is that if it really is end of month flows, and the end of month flows are really strong, you know, this could really keep going. But they're probably going to be pretty methodical about it. I don't know. I don't feel like that move up that we had was quite dramatic enough for them to be like, oh, we're just going to take off now, right? I kind of wonder, so if I'm a market maker and I'm long And I would like people to hit my offers, right? Holding this big long spread doesn't necessarily help me, right? Okay, there they are back up at the top. Oh, it's like 4K's at 14 and 13.5 now too. So now you're kind of getting some signs that after that news got through and everything, that there are some large buyers in this market because they're adding liquidity into the market. And all of these levels down below us are 3500s now, which is a fair bit more liquidity than we've seen in the past few weeks. Okay, S&P 500 selling off really hard there for some reason. I'm not quite sure what to make of that one. That there might have been a news headline in an individual stock there. It was a quick drop for the E-mini, wasn't it? This is turning out to be one of the more interesting Mondays that we've had in a while, man. Like what happened here in the treasuries is a little odd, right? Like they pulled for the Chicago PMI and stayed light until like a few minutes after the full number was released. And then once things started moving and they started moving up, the liquidity thickened up considerably. And now we're at some of the thickest markets we've had in quite some time here in the treasuries. Right? And then after that, as the yields are coming back here a little bit, and we're below 395 now, the S&P 500 is just puking hardcore. Okay, so there's a big iceberg at 4605. Thank goodness you're paper trading. Uh-oh, what did you try doing, Alex? Bitcoin taking a little bit of a hit here too, by the way. And the treasuries, I should also note that the treasuries seem to be going here on their own. Well, this is going to be hard because I feel I'm kind of feeling like it's time to take it off, and I think the main reason I'm feeling that way is just because of the amount of time that I've been in the trade. I guess it was about a 10,000K change in cumulative delta to get up here, so that might be another good reason. But I'm not really seeing like a super strong like iceberg, like that sort of distribution stuff going on up here. And the treasuries seem to be going by themselves. And if I'm correct, it really is end of month flows. And given the way that the book has reacted here and everything, this really could be something that could just like go all day, right? So I feel like I should try and hold it. Or at least that's what I believe I should be doing. I'm still really curious what's going on here in ES. I don't think that it's like super concerning, but that was like a 15-point drop in the course of like a minute or two. So yeah, well, the EOS did kind of bounce there, but that's probably the liquidity more than anything. Like, because you move down so fast, there's like this vacuum behind it, right? Like, imagine if you are underwater and you move really quickly underwater, right? When you stop, there's like these bubbles behind you, and you kind of float back a little bit, right? That's kind of what it's doing. You get sucked into the vacuum that's behind you. So the book in the micros is still a little fishy and light and like big spread, right? Treasuries did go down a tick there. That 18 is stacking up now. There's quite a bit. It's sitting at 18. So it's curious to me. 14.5 was like the overnight high before we broke out, right? I just find it interesting that there's more liquidity starting there and lower, and the stuff that is stacked since then is less. Yeah, like the wake from the waves, yeah. It's a liquidity hole because we moved through it so fast. So there's that 16 again, and a decent amount traded there on the way back. So I think what might be going on here in the micros is just that the retail traders aren't really trading it. And so they just have to hold a really wide spread. Could be. Okay, so now the liquidity is not there at 14.5. Move down to 13.5. Is it just following it? Let's see if they tick back up again. Does it move to 14? Yeah. There was a little bit at 14, then it ticked back down. Yeah. It's sent it multiple times now. So for whatever reason, 3 ticks away, or 4 ticks away, they're stacking more liquidity. And on this insight, they're not putting as much up. And what about the dollar? And the dollar's still kind of on its lows. Feel like I'm becoming a little bit hyper-focused on the individual moves. There wasn't like any super clear indication up there at the top, but you know, I probably could have justified taking a quick profit. And it seems like this pullback is a deep pullback, but it's really not. Curious. Okay, but I just reset things, didn't I? Yeah. So I'm kind of seeing something here at 25. Or sorry, at 15. And given the time, 8:07, well, I know. So if I want to get out of this before 9 o'clock, you know, I could just try holding it until 9 o'clock. But they seem to be holding this 15 here. So I'm kind of thinking that the liquidity hole might be forming at 15. Nope, no reaction to that. Okay. Sometimes you try flashing an order a little bit and it wakes them up, but... Is it similar to spoofing? No, I wouldn't say that because it's one lot. Spoofing, you're kind of creating like pressure, right? Like if all of a sudden there's like 9,000 contracts at 14.5, which way you think it's gonna go, right? Like people, that's like, oh, that's a ton of buying pressure. Like they're just gonna push through there. You're not even gonna take that, huh? Have it your way. You had the chance. You had the chance. Nah, it's just trying to make some activity on there to say like, yeah, I do want that. right? It's trying to negotiate with the other people that are there. You know, it's like, how can I modify my order to try and send messages to people, right? That's weird. Okay, so it's ticking back up, and not on a lot of volume either, by the way. So, like, I'm detecting market maker shenanigans. Yeah, to see if there's the people on the other side. Yeah. So sometimes I will just, you know, I try to be really cautious about this because I don't necessarily want to get into a position, but sometimes I'll see like something weird and be like, okay, if I just put an order right here, do they do something? Do they take it? Or I can put an order out and see how eager they are to take it, right? Like sometimes in a situation like this, I'll put a bid out, right? And if they like immediately take my bid, then I'm kind of like, oh, okay, this actually is going to go further, right? So you can kind of put an order out to kind of test the market a little bit. And in the micros, I don't know if these things really have an effect or matter, but they make me feel better about the situation, so. And that's all that matters, yeah. Right? Well, I tell you what, when you're looking at the dollar, I would think that at some point that kind of has to mean revert a little bit, but the pressure is still on pretty heavy over there. I don't know. Maybe the market orders out there to hit just aren't there. That's so. Yeah, I don't know if the market sells and the micros are there. So I'm going to take 20. Would have liked the other $10, but I don't think they can give it. I guess there was a chance for me to have gotten it, right? But the orders kind of seem to be suggesting to me that it's not in my favor at the moment. And I'm thinking that they're probably going to be like, stuck around here until the rest of my session. Although, let's see. Maybe they flip back around. Maybe they go and they push new highs all of a sudden. But I was losing the negotiation there, right? Either way, $20 is not bad for what it was. For what it was not bad. Oh, I could have made 35. I don't know. It is definitely better to get out when like things are getting crazy. I kind of thought, like they did reach the high, but it did not quite result in quite the, I don't know. Yeah, don't scoff at winners. Well, this is kind of interesting the way that it played out, because it definitely hit the market, right? Like there was lots of activity and all sorts of stuff going on, but there was no follow through, right? There was no follow through. So, I think I maybe made a little bit of a misread there that when I was kind of feeling like maybe I should, like I probably should have taken it there. Just wasn't a very clear exit. Because like the other thing that I'm noticing here when I look at the chart is like the cumulative delta from that further push out is almost completely coming back, right? So like the flow is returned to selling, which I don't like. So really should have gotten up in here, but it's almost, maybe there was a order pushing back the other way. I don't know. Which bar did it happen at? 16? Yeah, it was when there was a bunch. It was like that 25.49. That's probably when I should have gotten out. But, a lot of that is just kind of like, what is the term that they say? Splitting hairs, right? Maybe a little bit of really good luck on the entry, just a little bit of bad luck on the exit. Still a winner. And still a larger than usual winner too. Pretty good read. And there's still the possibility that it continues up a little bit further, but just maybe later, much later in the day, right? Because the other thing is I'm wondering, again, my thinking is, okay, that news came out, it was a little bit bad, so that helps the treasuries. And rebalancing should favor treasuries today. They made so much in the equities, they're going to sell some equities and buy some treasuries. But, how much of that was maybe actually just short covering? I think that maybe some of it was. Right? And I mean, I can never really know for sure. That's just kind of a guess, but kind of the way that it played out. And with this not, like I'm actually getting like active pushback against it and stuff. I'm thinking, yeah, I think that maybe some of that was really just stop run. Definitely a good way to start the week, though. I'm going to pull this up and check it here real quick. Make sure that it did indeed execute. Yes. Oh, the place I was flashing, I only lost $5 on that, so that's okay. Oh, no. I was talking about stop running the treasuries. So I think that there was a lot of selling down there at those lows when I got in, and that somebody got caught off sides and had to puke into the highs. Is what I'm thinking, because the flow just was not persistent, right? If it's a strong meta order buying, then I think that they would have been more aggressive to be buying in these areas, coming back into like the scene of the crying, like 15 and below, right? And it's not. They're letting it fall. There's more selling than buying, right? So I don't think that the flow long has been persistent enough to be the kind of meta order that I want it to be. So that's like a super serious judgment call, and you know, I'm kind of guesstimating because can't actually know for sure what's going on, right? But that's just kind of my experience says to me that if it was a strong meta order, that it wouldn't have given up so easily. So, and I did avoid. Oh, well, actually, we're still in the same place that we were, aren't we? So I could still be sitting here trying to get out at 3955. There's not too many people trading it over here today, though. Oh, you know what, though? Maybe it's because I'm in the wrong... Well... Yeah, let's pull up the new contract. I'm kind of afraid to close that one down. I'm going to pull up a new one. Should be, let's see here, August now, right? Let's see here. Yep, we're on N, and now we go to Q. Oh, that is better. It's not as much overall, but there's more volume over here. So I might have done better had I have done this over on this instrument, huh? Beginner, so I'm only aiming at $50 a day, but blow it hard. You know, you could trade multiple contracts, right? And you could make $50 a day. But I think that the treasuries are good to learn on just because, like, you know, a lot of what we're doing over here is economic news and all of that. Like, that's still going to be useful to you. You go over to ES, right? Now, curiously enough, this August is significantly lower. Is that just how much they're putting on the basis? It's like 10 basis points, 10, 20 basis points for a month. Now that I'm out, the spread has come in, right? I have to say, it's the liquidity in the micros is very much split between the two. I think going forward, I would rather execute over here. Yeah, I think I'd rather execute over here. It's not acting quite as fishy as this one is. It seems like that those small robots did switch. Glowing X logo above Twitter HQ triggers latest conflict between Musk and San Francisco. Dude, the drama. I remember saying when all this like Musk bought Twitter is like, it's either gonna be like the craziest turnaround story ever, or it's gonna be a beautiful disaster. And either way, it's gonna be super entertaining. And yeah, I think that was right. Like it is super entertaining, I guess. It's super entertaining, I guess, but I'm a little concerned about how Twitter goes from here. The true irony is me looking at the end of Twitter in the face and being unhappy that it's going to go away. That's the true irony, right? Yeah, over here is the new contract, yeah. So let's switch it. There we go. At the same time, would it be that's why you were able to pick up that price earlier in the morning someone was trying to get out of? Well, I don't know if they were trying to get out of the late contract, but yeah, to have a one lot kind of sitting there. So going back, you know, what happened was there was like a one lot sitting there, and then the price below it, the two prices below it, there was nothing, right? So I knew that if I hit that contract there, that, you know, that would be 2 ticks in my favor, right? And I kind of did it at a time where they did immediately stack behind me and then they went, right? So that worked really good because I caught it on the edge and then it went. And so I never had any adverse ticks against me, right? That's why I did it. Now, to have an order sitting there like that is unusual. And I did not really realize it at the time, but it was because it was the last day of the month and the contracts are switching. I mean, you can still trade it today. So, you know, in the past, I haven't had too much trouble trading it the last day. But clearly that's what happened. And I kind of paid for it on the way back, right? Because I probably could have made 5 or 10 more if I didn't have to deal with the spread, right? So, but the liquidity over here, at least in the 10 years, seems to be much tighter, right? I like that a lot more. But given the time, so the other thing is it does look like I made the right choice here because it has been basically going sideways for the last 15 minutes, which is kind of, I want to avoid that sort of a thing. So it did indeed form a little bit of a liquidity hole. Now I am starting to see the volume go long. So if I was willing to stay in it, you know, longer than 30 minutes, I think I could potentially try taking it again. But although I feel like it's a little bit too early to be doing that. You know, I don't have the other instrument up anymore, but probably would have been getting more of the price that I wanted originally, so. So, yeah, I'm trying to be like, well, we still got 30 minutes left, so I don't have to really make any strong conclusions yet, but it kind of feels like I did get like kind of the spot, but that the buying pressure may still be there. We'll just kind of see. But, you know, you might come back to the end of the day and be like, oh man, Seth, if you had just held it all day, that would have been like 50, 80 bucks. Maybe. But I'm kind of limited by like the time that I have and other things, right? So it was an okay decision to take it off where I did. And you can decide whether that is really true or whether that's just me trying to, you know, comfort myself for getting out too early. So I'm looking at cumulative delta long just a tiny bit. Kind of makes me want to be like, maybe they can go back up to the highs. Yeah, the liquidity over on this side is better. So that's another thing, is I kind of feel bad for kind of not remembering that it was the last day of the month and that the liquidity and the micro yields might be a little fishy. So that was a mistake on my part, that and I guess I just didn't have to pay for it because I got lucky. I don't know, they're battling it. They're battling it there, 14.5 for sure. Luck is a skill. The way I've always heard it put is, the more risk you put on, the luckier you tend to get. I don't know. I've never really been the huge risk taker though. I've done pretty well by not doing anything super crazy and just playing the long game, right? Yeah, well then let's put on 1,000 lots, yeah. You see that bid is looking weak, but they're not hitting it at 15. The heck? Oh my gosh, the headline that just came through on my screen about on Twitter that is just so shockingly bad to me. I can't believe that that's like loud. But some people, somebody retweeting somebody else and pointing out how stupid it is. So that's okay. I'm not following an idiot, but man. Who writes a headline like that? That's so dumb. It says slavery, or as we call it in Florida, agricultural internship programs wasn't that bad. Come on. So dumb. Especially with this whole thing about them claiming that DeSantis's history curriculum implies that slavery wasn't that bad, which is not what the curriculum said, but man, good grief. Well, if you had any question about what this political cycle is going to be like. Okay? It's this bad now. Just wait until after Labor Day, man. Just wait until after Labor Day. Even though DeSantis hasn't been doing too well, Donald Trump has some problems too. Like, they're spending a lot of money. They're spending a lot of money on legal problems. It's going to be an ugly primary, I think. I think it's going to be an ugly primary. Okay, so I'm just coming back down through the headlines and stuff now. The top story on Zero Hedge right now is Secret Service denies Freedom of Information Act request to provide a list of people potentially linked to the cocaine incident. Man, I hope that YouTube isn't like reading everything that I say and deciding to push or throttle my videos in the future from that, because all of a sudden I'm coming through and reading all the headlines and they're all slavery, cocaine. Okay, jeez. JP Morgan projects record gold prices in 2024. JP Morgan saying that? I don't buy that, because they've been one of the worst ones on the short side. I really hate the way that Zero Hedge politicizes headlines sometimes. Biden gaslights Americans with fake manufacturing boom as U.S. production plunges. Yeah. Re-steepening yield curve will be a warning for stocks. Could be. It's not happening today. Wow, Phoenix hits 31 straight days above 110 degrees. My gosh, it's so hot out there. Is that how where you guys live? What's your bet on Apple and Amazon earnings on Wednesday? I don't know. I don't keep track of that sort of a thing. I'd say most of the tech stocks have done pretty okay though, right? But I don't know. You're always kind of playing a dangerous game trying to bet against Apple and Amazon, right? I think Apple's been more consistent, but Amazon is still pretty, right? And here's the thing. I genuinely like Mr. Bezos. I think, it seems like on one hand that he kind of has some opinions about work and labor and stuff that are a little heartless, Like everybody complains about they don't have enough people to work in the Amazon distribution factories because they're not what they pay them and how hard they work them. Which I agree, right? But you know what? Like, people are nuanced things, and there's a lot of things about Jeffrey Bezos that I think are kind of interesting, and he seems like a fun guy. He seems like my people. He's not like, especially when he was younger, he was not like the social guy or anything like that. He was just a nerd that had an idea and got it done and worked hard. Weather is okay in Germany. Was on holidays right before the forest fire. Ooh. They have forest fires in Europe? Really? Wow. I thought the whole continent was just a never-ending concrete jungle. 13.5 now, huh? Back down to the bottom of the range. No, it's been 100 degrees over here. So I thought, okay, I can. So we got these things in. Oh my gosh, I've been doing too much stuff. Okay, we changed my couch. I normally wouldn't want to go and splurge on a new couch. Okay, but Asher has gotten into this. Asher is my 3-year-old son. Asher has got into this thing where he figured out that he can tip over the reclining chair. And so every chance that he got, he would tip it over. It needed to remain tipped over on its back. Okay. Problem with that is that we have a 13-month-old that, you know, could potentially be under there and get squashed by a chair, right? It is, I'm telling you, man, it is like a constant state of fear over here because, you know, of fear that the one child will kill the other child. Okay? He is just not, I don't think he's a psychopath. I think that he just really does not understand that you could hurt somebody. And he doesn't necessarily understand when he did something wrong. He's getting better at it, but I don't think he necessarily always understands when he feels bad once he knows that he did something wrong. But anyways, so we got a new couch, right? So I put this couch, my old one, in the garage trying to sell it. Nobody's bitten yet. Okay. And then on top of that, there was on Amazon Prime Day, my wife found these hanging storage devices. It's like a little platform that hangs from the ceiling, that because we have a really high ceiling in the garage. So it's like there's all this wasted space up in the ceiling, and we're like, we should be able to store stuff up there. So that's what we're doing. We're storing stuff up there. But with the couch and those boxes and everything, like, it's getting crowded. And then on top of all of that, I have all of the cardboard debt. Okay, you're familiar with what cardboard debt is, right? That's like you get something big in the mail, and then you have all of this cardboard. And even if you cut it up and fold it up and everything, it doesn't all fit in the cardboard recycling bin. Then you have to keep it somewhere until the trash comes to take it away, right? So I have massive amounts of cardboard debt. I was running out of room. So we decided to go and put the thing up. And on top of that, also, was my parents, they need to paint their garage soon because it's starting to get bad. I probably should do my garage. I think that I'm going to have to remud it. Maybe I'll just pay somebody to mud it, because I tell you what, people that are good at mudding, they're good at it, and I'm not good at it. But we since we knew we'd be doing that, we went and bought a scaffold so that I could do that and put it up. So we put the scaffold together, and I was supposed to just put the scaffold together and then leave it, see what we had, and decide what to do from there. But no, then it was like, well, let's pull the storage thing out and see what that looks like and try and sort out where we were going to put it. And then once we did that, it was like, oh, well, it's too big for me to put somewhere, so I guess we got to put it up. So I put it up, okay? And the whole time, it's like 90, 100 degrees in my garage, like in the shade. So, oh my gosh, it's so hot. And then the whole time, I was also trying to make plans with my uncle to try and finish my desk, right? Because the thing is in my garage, I've got a swamp cooler. So like I can shoot this swamp cooler at me. So I'm working in there with the swamp cooler blowing directly on me. It's like absolute hell in there, right? And then we're going to go and work in the wood shop where there is no such swamp cooler. No, thank you. So we didn't work on the desk this weekend. It's hot. But supposedly it's supposed to get down to 90 on Wednesday, so maybe I can finish the job on, because there's a second one I've got to put up. When you have older kids, the cardboard debt will go away. It becomes Castle. No, like that's the thing is I'll take a box and I'll give them a box. So like both of the little kids, both the 3-year-old and the 1-year-old have their own box. But some of the boxes that I got were huge, right? Because the scaffold came in a big box, and both of the hanging things come in big boxes. What else? I've had to buy too many things lately. I'm really grateful that taxes and the new job and everything worked out. It always seems to work out that way for me. So like I switched jobs, and the old job, when they gave me like my vacation and everything, ended up being like way more than I expected, and it basically ended up being like a whole extra paycheck, right? And then my washer died, so I had the money to replace my washer. My kids play with the Amazon boxes more than that. Yeah. I feel like that too. Like if you get an actual... Yeah, so I have a day job. I'm a site reliability engineer. I must say, Seth, I hate American units. Listen, okay, so I totally get it for like distances, and I've come to prefer using metrics for weight, okay? But for temperatures, Fahrenheit is better. Fahrenheit is better. 0 is really cold and 100 is really good. Oh, you do SRE too? Well, there you go. I don't know how I ended up getting roped into SRE, but I'm really grateful because, you know, it's working out pretty good. And that's the thing when it comes to futures, is that futures is a great wealth enhancer, but not necessarily a great wealth builder, right? Yeah, I had to Google what 100 Fahrenheit was in Celsius, and yeah. So like the way that I would put it is it usually doesn't get below 0, and it usually doesn't get above 100, right? If it's above 100, you're in a weird place. You're like in the middle of the desert where it gets crazy hot, right? Like in Phoenix right now where it's 110, okay? And even if it gets above 100, it usually doesn't get very much above 100, right? Same with 0, because 32 degrees is where water freezes, right? So then you get down to 0. That's like when you're below 0, that's like you must be in Chicago or something. Like that's crazy cold. It usually doesn't get that cold, right? And so that 0 to 100, it's perfect because it's based around what we usually see and how temperature affects humans, as opposed to centigrade where it's like 0 is freezing, right? And then like it's so weird. Fahrenheit's better. Yep, I head off to work. I'd say the new job is fairly flexible, but I start at 9. The old job I had to be like exactly at 9 because there was always a morning stand-up, but these guys don't like stand-ups, so we don't do that. But yeah, so these days, anyways, I was gonna say, like, so these days to have the capital for it to really even be worth trying to do some of these things like trade futures or stocks and stuff like that, you know, you've got to have gotten lucky somewhere, you know. Well, I don't know if it was so much that I was lucky, but like I was able to get into a house at good times because I understood what the market was. You know, one of the things that I keeps driving me nuts, and again, it's one of those things that's like, well, I don't know, can you really come out and say it? Because like if you say it, there's going to be all these people on social media that hate you, right? But like, what's going on with housing right now was predicted for like a long time. You know, for a long time they were saying, hey, you know what? Like, we're not building very many houses, and like all of the millennials will get to the point where they want to get into a house at the same time. And I said, oh, then I better get there first. So I did, and I've benefited greatly from it, right? And then the inflation comes. You switch jobs. And then the amount, because at first it was a little bit of a stretch sometimes for the payment, but now it's nothing. Now it's a trivial amount of my income. You don't like saying, yeah. I don't know. It's for me, I'm kind of like, for being the new guy, I'm kind of like, okay, but like how, you know, you have to talk to me at least once a day. Like I've never started it because the first job the job that I had before this, you know, I started that way back in 2016, and it was from the office job, right? Any thoughts for what to expect this week? Well, so today I think that we're probably going to continue to see a little bit of mild selling in the equities and buying in the treasuries as they rebalance, because equities did really, really well this month, right? I don't think it's anything crazy, but for the rest of the week, though, let's see here. So I need to come back and look at the whole week. Friday is non-farms, right? So there's that. Oh, and tomorrow we get ISM Manufacturing PMI, which is a very, very important number these days. ADP. So yeah, we've got a lot of data coming in. Now, keep in mind that we're still going to get the data in September as well before the next Federal Reserve meeting, okay? So what we get this week is just kind of a taste, right? But I think that it will be a relatively eventful week. It also kind of is looking to me, based off of what happened this morning, that the Japanese yen is going to continue to be doing crazy things, right? No. I mean, like the next Federal Reserve meeting in September or August. It's September, right? Well, I had a lot of mixed feelings when I got out of my trade, but when you come over here and you look at the chart, I totally read it correct. Would have been nice to have caught it before it fell down here, but once it came down to this 14 area, it definitely did kind of chill out and form a hole, and they're just kind of stuck in that range now, and they didn't do anything for the whole 30-45 minutes. So, okay. It could have been a great trade if I had gotten the exit, but so it's just kind of a good trade. Yeah, and then you got Amazon and Apple. I'm sure there's going to be a reasonable amount of volatility this week, right? Like what you're likely to see here is decent amount of volatility this week, an okay amount of volatility when we have CPI, which, by the way, is that next week or is it the week after that? Yeah, it's next week, August 10th. Oh, why is it on a Thursday? That's so weird. Okay, but after that, after August 11th, probably the rest of the month is going to be pretty ill, right? Then you'll get into like the deep summer months where everybody goes on vacation. Yeah, I don't trade the earnings, but it's always important because we can get huge moves. So we definitely will. I was just still thinking about how grateful I am for how well things have worked out for me. I mean, it's kind of hard sometimes to prove to yourself whether you were lucky or you did the right things. But the type of job, I mean, software engineering, I always knew was going to be a good gig for me because I was really good at it and I really, really enjoyed it. And it was, a place where there was always projected to be growth, and so that one was an easy call, right? But how I ended up becoming site reliability engineering is kind of like random and just me kind of going along with the flow, I guess. And but that has turned out really, really well for me as well. And then all these good decisions, and so someone's watching out for me, I think. Of course, it was not easy during the period when my that's how you got into it as well. Yeah, I think that's the way everybody is with SREs. Is just like you happen to be the one that knows the most about it, and we need it, and you just kind of get roped into it somehow. Started from the side. Oh, just a salesman. Oh, okay. I've always been a programmer. I mean, this on this side, where I'm working right now, the development experience is really valuable because I basically have to be able to look into every piece of software they have. You know, that's a lot of code if there's a potential problem. So. Last to exit the room with the problem. There you go. Oh man. Yeah, it's just so weird. I've never met somebody that, like, when I went into school, I said I want to go into site reliability engineering because that's where the money is, or because that's what I enjoy, and then they went out and they made that their. I've never seen that. It's always you were doing something else and just kind of somehow all of a sudden you're doing SRE and you don't understand how it happens. They only pay us because of our pain. Yeah, I don't know. My last, where I worked before, they weren't super demanding. I mean, it wasn't like we slacked off or anything, but I guess part of that was because before that I worked at Goldman Sachs and they were demanding. Let me tell you what, they were demanding. So then I come over here and I'm expecting them to be a little bit more demanding, but so far they haven't been. But we're new, so. But I've got a lot to do. Just when I think about that, because the reason why my mind is dwelling on it isn't like, oh, I'm so lucky and things are so. Because I think a lot of people, they get into this position and they think, oh, I'm so much smarter and better than everybody else, but that's not the way that I think about it. Like, to me, it's like a huge responsibility because there are so many more things that we get to do. Like, we're getting close to, I want to build the second machine so that we can have something that will translate as I speak everything that I'm saying and read what you guys are saying, and we'll pass in Wall Street research into it to try and, get some edge out of some large language model sort of a thing. And, we might want to, I think that we're going to try and start a fund, and I've got to save up for a fund. So I got to spend as little as possible to save up for the fund. Like, it's a huge responsibility. And I feel like that I have a responsibility to do these things because I can, and there's not many people that can, This is what they always, like, my kids and my wife, they think like, oh, things get easier, and I was like, no, because the more money you make, the more responsibility you have. So the smart ones run away. Maybe. Honestly, for me, a big part of things working out was just knowing that that there was going to be inflation. Like, I knew when I bought the house that the housing prices were going to continue to go up, and that the wages were going to continue to go up. And so I knew that I could get in with that, it being a little bit of a stretch, that was going to be the right decision in the long run. So the inflation kind of helped. You want to run? Yeah, I think I want to run a fund. No, the company that it's customer relationship management softwares. This is where I work right now. But I want to start a fund, I think. Because specifically what I see is that in about a year, there's supposed to be a test to come out that will allow retail traders to trade into things like private equity and hedge funds and so forth. But the problem is you'll take that test, but then there won't really be any funds or anything that you can put your money into. And so I want to be at the forefront of that. That sounds like an opportunity. And I think that I'm kind of well positioned to be able to do that. I mean, obviously not as well positioned as somebody that's already run a fund and knows what they're doing, but I feel like that I understand the retail traders really well, and I've been around long enough, and I don't know if there's very many other people with YouTube channels and so forth that would be able to start something like that, right? So I think it's going to be me, and we'll create a fund that will give you guys the ability to take the test and then invest, and then we can turn around and do private equity with it. So that's kind of what I'm working towards. And so I'm doing some study, and then we're trying to build out my my compute over here so that we can do some more serious back testing on like portfolio level strategies and so forth. So, boom. Lots to do. And then on top of that, we got to make some more YouTube videos. I started writing the one about price actions, or smart money concepts. So far it seems fun. Like I think I got some good parts. So, anyways, did I miss anything? Yeah, be careful out there with earnings and everything. There's going to be some crazy stuff going on this week, so we're going to have plenty of opportunity, and this was a great way to start out a week like this on a Monday and with a $20 win. So I will see you guys tomorrow. In the meantime, stay excellent, team.